Welcome back to Stocklabs Market Recaps. And it was another good week for the markets past week. We kind of mentioned that summertime is pretty low key. Generally, trends stay in place. Obviously things are kind of frothy, but another strong week. Especially NASDAQ took sort of the leadership position again, up 3.8% for the week. S&P up 2.2, the Dow 1.1, and IWM up 0.5%. So not much out of the Russell, but kind of the trend for the year is the Qs are out in front, leading, especially with some of those mega cap stocks that are on kind of a pace that they haven't been on in a long time. I mean, they're all up 50+% almost for the year, it seems like. So, yeah, indices, not much to poke holes at in here. Even bonds were up some. Crude oil had a bounce week. So if the pattern holds, it's going to drop this coming week because crude has kind of gone nowhere for a while. I mean, nowhere to down, really. So every bounce has been sold in crude. If we look at our leadership stocks, how did they do this week? They basically blasted off again. So NVIDIA up 10%, $1 trillion market cap now. It's in the club. Tesla up 7, Meta up 6, Microsoft up 5, Netflix only up 3 or 2.6, Apple up 2.25, Amazon 1.7, kind of underperformed, Google underperformed, up 1. So the top half of this list, they all basically blasted off. The bottom half basically performed slightly worse than the NASDAQ itself did, so they kind of dragged a little. But again, no big deal as long as one or a handful of these is putting up these kind of numbers in a week. They're too large of components to the whole. Obviously, the whole Russell doesn't even have to participate, or it could even drop, and it won't matter to the Qs really, or so much the S&P, because those stocks are kind of irrelevant, just the way the indices are constructed. So, yeah, solid week for these guys. Again, you see the year-to-date returns. Okay, I said 50%, but they're all up over 40%. Some NVIDIA up almost 200% for the year already. It is only the middle of June. So right now it's June. It's Juneteenth almost. We have that holiday coming up, and Father's Day. Middle of June, 200% year to date. I mean, what can you really say? It's just a beast. So if we look at breadth, industry-wise, pretty broad. You can see every sector was up for the week. Leaders were tech. Okay, it was only up 2% on a median basis. So median tech stock really underperformed the NASDAQ. NASDAQ was pushing 4%. Median tech stock is like half that. So really, you're not getting great stuff from tech, broadly speaking. It's mainly just those big guys. There are some pockets, like SAS has been on a nice run for a little while, but overall tech, kind of just like everything else. Industrials up 1.7, consumer up 1.8. Consumer was second best industry for the week. Healthcare up 0.8, kind of a drag. Financials up 0.9. So financials, we mentioned this a week or so ago, they've basically stabilized since all the regionals were blowing up left and right. Services up 1.3, utilities up 66 basis points, and basic materials up 0.5%. So we said oil was up, crude oil was up for the week, 2.25%, something like that. But a lot of the materials, commodity stocks, they don't really believe it, so they didn't really go along too much for the ride. Subsector wise, okay, we have a decent amount that are up. They're in the green, but nothing is wildly green. I mean, okay, we have EVs up 8%. I mean, obviously Tesla was up a good amount this week. Even regional airlines also up 8%, hospitals 7%. And then, we got a couple sectors, semi stuff, storage stuff. But really, there's not a vast number of stocks up over 5% on a median basis. So, I mean, the breadth hung in there. It was fine, but it wasn't like overwhelming or anything like that. On the downside, you can see basically nothing is on here. I mean, we've got some couple random sectors down 4-6%, but the rest, they all basically gravitate towards unchanged. So breadth held in, kind of did what it was supposed to for the market. And if we go to breadth by market cap, so we've got 1 to 5 billion. I'm just going to erase these two. 1.38%, and 5 to 10 billion up 2.4%. 10 to 50 billion up 2.35. 50 to 100 billion 2.75, so pretty strong there. And TerraCap's up 2.72. So actually, we're kind of top heavy on the breadth as far as the overall market goes. I'm top heavy, I mean like by market cap. So the 50 to 100 billion and 100 billion plus groups, they were the strongest ones out of all the slices of the market that I've got here. So not as much participation from the small caps, like I sort of mentioned earlier. A lot of the times doesn't matter. If the large caps, and especially the large cap techs, are performing as well as they are, nobody cares about the small cap stocks. It's like the little guy doesn't matter. Just remember that for most things in America. So if we look at intelligence for the coming week, which it will be a short week this week because the market is for some reason closed on Juneteenth to celebrate whatever it is you celebrate on Juneteenth. So for this coming week, we've got SVIX. So volatility should be bearish this week. Got big banks bullish. I've got home builders bullish. We've got China bullish. Russell bullish. Semiconductors bullish. Inverse FANG is bullish. Okay, so maybe, I mean, although I think Stocklabs liked this for this past week, so maybe, I don't know. I mean, the saying is early is wrong, but Stocklabs also liked this FANG D last week, sort of looking for these FANG stocks to put in kind of a high. I mean, this is again on here this week, so we'll see. We'll keep an eye on it. Ultra short crude is bullish, so bearish crude oil. Like we mentioned, crude has no momentum at all. Every rally is sold, so Stocklabs is quantifying that and picking up on it here. I mean, with 70+% odds, this crude oil trade will, I mean, the bullish crude move from this past week will reverse itself. So can take a look at that. And Europe bullish. Not sure anybody really trades Europe because Europe is kind of, the economy of Europe is made up sort of how, I mean, there are big companies in Europe, but none of them are big tech companies really. So it kind of falls in the same category as the Russell that nobody cares. Okay, so let's move on to the inverse of this. Center equal to center equal to. Let's flip this around. So worst performer this week is slated to be, I mean, not with certainty, but based on how the current trends have gone, gold miners should be bearish this week. Biotech should be, okay, this is bear biotech, so biotech itself should be bullish. This is inverse Tesla is bearish, so bullish Tesla this week. It kind of somewhat negates that Fang D trade because Tesla is part of that group, sort of. UNG bearish. Natty Gas had actually a pretty strong week this past week, so Stocklabs is also looking for that to not stick and to sort of give up some of it at least. Got Brent bearish, copper bearish, ultra short oil and gas is bearish. So they kind of like the oil and gas producers, explorers this week. Although the fact that so many commodities are on here being bearish, I mean, I think it's going to be tough for this. Be tough for the explorers to move up, but maybe. TARC. So this is a leveraged ARC ETF, is bearish, and I'm going, this is some kind of coin, long coin, meaning Coinbase is bearish. So bearish Coinbase. I mean, I think probably what you're looking at for this week is just some kind of choppy action. I mean, really, the market has not shown any interest in selling off. The one thing I will point out is we are still on kind of a, I mean, from the 7th, we're on a hybrid overbought signal on the market. This signal has basically 2 weeks to play out from this time. We also hit, this was notable. We hit, let me bump this out. This is on the Qs. We hit historically overbought on the Qs on Wednesday. So we have not seen one of these signals in like a long time. If I sort these scores high to low, you will see where this sort of ranks. So the sort of like how hot the NASDAQ is running is in amongst these .com era sort of readings. I mean, we have data going back, decades, so we can make these comparisons. The NASDAQ on Wednesday was as overbought as it was on, say, December 99, November 99. Now, I believe it was something like February or March 2000 that the ultimate high in the NASDAQ got put in. So even if this historical overbought does not play out like immediately, we have to sort of consider it in the scheme of like a longer time frame. Like if you zoom out, really what we're saying here is we should expect some either major consolidation or a sell-off before the rally really resumes. So that's just something to keep in the back of your mind for the coming, let's not say the coming days, let's say the coming weeks or even months, because these historical signals do not come like very often. So for this week, though, I mean, like I said, it's a short week, so volatility tends to be dampened. It is also the summer, so volatility tends to be dampened. I wouldn't expect a whole lot of craziness this week. The Fed is out of the way. A lot of things are out of the way. There's not really I don't think there's any real big earnings stuff like slated. So it's kind of just smooth sailing to sort of operate in these, you know, whatever the daily ranges or the weekly ranges, you're fine. Yeah, so that's pretty much that. Like I said, keep an eye out on the horizon. That historical overbought signal, might be noteworthy down the line. Friday was a bit of a sell-off. Kind of just, I don't know, just looked like some profit taking ahead of a longish weekend for the markets, but not gonna read too much into that. So that's pretty much it. Hope you guys have a good coming week. Enjoy Father's Day. Enjoy Juneteenth, whatever. If you have a day off, you don't, oh well. And we'll be back next week. So have fun out there and talk to you later. Bye.